Bitcoin just slipped below the 60K line before Wall Street wakes up. And that is not just a crypto chart problem. The real story is liquidity, because when Bitcoin loses a major psychological flaw, at the same time ETF demand weakens, the market is telling us something deeper. This is not about one candle, one headline, or one panic move. It is about whether risk appetite is still strong enough to defend the assets that need fresh money the most. The 60K area matters because traders do not treat it like a random number. It is a level where positioning, sentiment, options pressure, and investor confidence all start to collide. When Bitcoin is holding above it, the market can still tell itself the correction is controlled. But when Bitcoin starts losing that level while ETF outflows remain heavy, the conversation changes from "Is this a dip?" to "Who is still willing to buy?" That is where Wall Street psychology becomes important. Bitcoin has spent this cycle trying to behave less like a fringe crypto trade and more like a mainstream risk asset connected to liquidity, ETF flows, the dollar, yields, and tech sentiment. But that also means Bitcoin now reacts when the broader risk machine gets defensive. If AI and chip stocks are under pressure, if the dollar stays firm, and if treasury yields remain high enough to matter, then Bitcoin does not get to trade in isolation. The mistake many viewers may make is thinking this is only about Bitcoin being weak. The better question is whether the buyers who are supposed to defend Bitcoin are stepping back at the same time other risk assets are losing leadership. ETF outflows are not just a side note, they are a window into institutional mood. At the calm metrics, this is the layer we care about most because price is the surface, but liquidity is the message. So the takeaway is not that Bitcoin must collapse, and it is not that a bounce cannot happen. The takeaway is that 60K is now a test of market confidence before Wall Street fully reacts. If liquidity returns, this break may become another failed breakdown. But if ETF demand stays weak, the dollar stays firm, and investors open the week defensive, then Bitcoin's 60K loss becomes more than a crypto headline. It becomes an early warning about risk sentiment itself.